Today's clip is from a very recent interview of Michael Saylor by Nick Bhatia on the Bitcoin Layer YouTube channel. Earlier in the interview, they discussed a spot Bitcoin ETF in the current U.S. regulatory environment. In this clip, Michael discusses the sources of demand for Bitcoin and the future of Bitcoin adoption. There is going to be a period where Bitcoin will have to massively reevaluate upward. By the time the masses get in, we will be at $250,000 a Bitcoin or above. Right now, we have a unique window to stack sats before Wall Street moves in. Everyone chooses how rapidly and how enthusiastically they embrace Bitcoin. Please enjoy the clip.
Is about a couple of the topics you've talked about. One being the spot ETF in the United States regulatory environment, and the other being this source of Bitcoin demand coming from around the world in countries without stable currency regimes, in countries that have seen frequent default of their sovereign debt. So maybe you can just answer for us, where is the Bitcoin adoption going to come from in the next 5 to 10 years? Is it both of these sources? Is it one before the other? And what is your vision for Bitcoin adoption?
Bitcoin adoption is going to come from all channels. There are going to be on-ramps via crypto exchanges everywhere in the world. There are going to be on-ramps via peer-to-peer trading. People are going to actually trade their goods and services for Bitcoin to get in the ecosystem. There are going to be on-ramps from operating companies that start to heavily invest in Bitcoin. There's going to be on-ramps from the spot ETF, and eventually there'll be on-ramps from conventional banks like Deutsche Bank and the like. They're all different ways that capital will flow into the Bitcoin network. What'll be the biggest? The thing that's going to drive price most, that'll be the first order driver of the value in the network, will be the spot ETF first. If you have the ability to buy Bitcoin right now via a crypto exchange, you should count yourself lucky. You have if you have the technical capability to buy it, and if you have the knowledge to be confident in buying it, then you're going to be the winner, because you get to buy it at 26,000 a coin instead of $1 million a coin, right? And so when the institutions come, massive walls of capital come, and when they buy it, there's going to be a massive short squeeze. There's not enough to buy. The price is going to have to adjust up rapidly, and as the price adjusts up, then the ability for the humble pleb to stack sats and to benefit, it'll be there, but it won't. Instead, you'll be stacking sats at 250,000 a coin, not 25,000 a coin, right? And if you're making $10 an hour at McDonald's, right, that's the same as making $100 an hour then, right? So you'll eventually look back and say, wow, I'm paying 40 times as much. So if you're making $10 at McDonald's, that's the same as getting paid $4,000 or $400 an hour, right, at that time. So right now is a very special period, because we're at the tail end of the crypto period, or the crypto era, where everybody got Bitcoin primarily through crypto exchanges. And we're just at the cusp, at the beginning of the Wall Street era, where most people will get their Bitcoin exposure by buying an ETF from Fidelity or BlackRock, or buying some other security. And eventually you'll see a banking era where people will just go to their bank, JP Morgan, and they'll buy the asset, and there'll be treasury services for people who want to hold Bitcoin in kind. And then there'll be others that'll hold the spot ETF because they think that's a bit easier. And then there'll always be the community of maximalists, that are self-custodying with their own seed phrase and hardware wallet and the like. And there will be, I think, an explosion in options and diverse ways to acquire Bitcoin and hold Bitcoin. I can see at some point when all the banks have adopted it, maybe you acquire with your bank. I can see another point when Apple and Google and Microsoft will adopt it, and maybe you'll buy it and hold it on your iPhone. I can see a world of a lot of special purpose, Bitcoin seed phrase devices and signing devices, and there'll be competition there, and some people will do it that way. I can see a world where there will be layers, right? If Bitcoin is a layer, then Bitcoin sitting in the Lightning Network is sort of a layer up if it's custodial. Bitcoin sitting in a spot ETF is another layer. Bitcoin sitting on the balance sheet of MicroStrategy when you own MicroStrategy stock is another layer. Bitcoin sitting custodially in the iCloud may feel like another layer to people. And then Bitcoin insurance policies, or I can imagine Bitcoin funds and other ETFs that imagine it's not an ETF which is pure Bitcoin. What if I actually take short duration sovereign debt and I mix it 50-50 with Bitcoin? So I end up with an instrument which is on one side it's generating 500 basis points of taxable income and low volatility versus the dollar. And on the other hand, it's generating 15% tax deferred appreciation. And I create this instrument which doesn't have the appreciation of Bitcoin, but it doesn't have the volatility. So you could imagine all sorts of securities like that. I think of Bitcoin as it's like the sucralose of money. You know how you want to make anything sweet? You put a little bit of sucralose in it and it makes everything sweet. Your coffee, your food, your drink, your everything. Well, if I put a little bit of Bitcoin into my insurance policy, my Bitcoin insurance policy has lower premiums and higher payout. And my Bitcoin-backed bonds, they have a higher appreciation. Or maybe I lace Bitcoin into the S&P index, and I give you half S&P and half Bitcoin. And then maybe I give you all Bitcoin. But I think that there'll be lots of different Bitcoin assets that people might want to buy. And you could even imagine Bitcoin getting built into different nations' assets, right? Like if I want to issue bonds as El Salvador, I issue Bitcoin-backed bonds. Or maybe in Turkey, I start issuing some kind of sovereign bond, which is half backed by Bitcoin and half backed by something else. And I give you a tax advantage to buy it. Like if you buy this bond, it generates yield, but you don't have to pay income tax on it. Like that's how New York City municipal bonds work, where the municipal bonds give you a tax advantage of your New York City dweller. So I can see Bitcoin getting securitized into lots of different assets, and ultimately it'll spread to billions and billions of people, and they'll use it lots of different ways, and it'll spread to thousands and thousands of companies, and they'll use it lots of different ways. And the early adopters will be the visionaries and the ones that have the greatest incentive. Like some people have a need. Hyperinflation is driving adoption, right? I mean, the reason that Bitcoin is popular in Turkey and popular in Argentina is because the alternative is not very appealing. If you convert all your money from local currency to dollars, put it in the local bank, and then the bank seizes your currency, converts it back to the local, converts your dollars back into the local currency and devalues it 10-1, then you're going to realize that simply buying dollars isn't a solution. So I think that adoption's being driven by a variety of things. I have a price model for Bitcoin, and my price model for Bitcoin is the price is driven by the monetary inflation in the fiat currency frame of reference. That's one part of it. If the currency is hyperinflating at 100% a year, you're going to see Bitcoin price in that currency going up faster than that, or at that rate. So that's the first driver, inflation, but it's a vector depending on the currency. The second driver is in this case the adoption of Bitcoin as a treasury reserve asset by the people and the institutions in the marketplace. So the more people that adopt Bitcoin, when you're a hodler, you've adopted it as a treasury reserve asset. People say, well, that's not using it. Of course that's using it. In fact, the single most important use of money is to adopt it as your balance sheet. If everybody on Earth adopted Bitcoin as their primary treasury asset, it would go to $10 million a coin overnight. And then up from there. So adoption as a treasury asset is second. And governments can do it. Institutions can do it. Endowments can do it. Religions can do it. Families can do it. Corporations can do it, right? I mean, every entity with a treasury could adopt Bitcoin as an asset. And there's a degree, right? Is it 1% adoption, 5%, 10%, 50%, 90%, 100%? Obviously, the more adoption, the more power. So that's the second driver. The third driver is technology or utility, right? If on the day that Apple says we built a Bitcoin signing device into the iOS phone or the iPhone, and now you can use your iPhone and your Apple Watch, and your MacBook is a multi-sig setup, or you can assign multi-sig between 3 members of your family with family sharing or something. When they do that and they make it instantaneous and easy, then you're going to see a big surge in adoption of Bitcoin, right? Technology drives adoption, and then you'll see a big surge in the price. Now, technology is not the only thing that drives adoption. What else drives adoption? Hyperinflation, right? Fear drives adoption. So hyperinflation is a marketing campaign for Bitcoin. Inflation is a marketing campaign for Bitcoin. Also regulation. When the regulators say that Bitcoin is a commodity, an asset without an issuer, that drives adoption. When they actually approve a spot ETF, that drives adoption. When FASB approves fair value accounting, that drives adoption. So regulatory clarity drives adoption. Awareness drives adoption. Education drive adoption. Technology, it's more important that Apple adopt Bitcoin than it is that your mobile startup adopt Bitcoin, right? If Apple builds Bitcoin into the iPhone, that's more important than the fact that somebody that wants to launch the next WhatsApp built Bitcoin into their app. So the behaviors of Apple and Microsoft and Amazon and Google, they're just like nation states, really. If China embraces, China says you can own Bitcoin, right? The more of embrace from China, the more embrace of the EU, the more embrace of the US, the more adoption. So those are the 3 first order drivers, adoption, technical utility, and inflation. And then the last, the second order driver, is productivity growth of the people that have adopted it. Right? In the extreme, and this takes you to the Austrian economics theory of sound money, if everybody uses our money, then the money, and if the economy grows its supply of goods and services by 2% a year, the money will get 2% more valuable each year, assuming the money supply is constant, right? So ultimately, it's not just about adoption, but like imagine the company that adopts Bitcoin also doubles their cash flows the next year, you see, right? So the productivity of the Bitcoin community will ultimately drive Bitcoin after we get through the first order effects. But the first order effects of inflation and utility and adoption, those things are going to dwarf every other factor. And all of these things are kind of a function of time, right? Right. One can say over time, information will spread, adoption will spread, people will build this into technology. Inflation is a function of time. So over time, you can say Bitcoin price is going up over time. The reason it's going up is because of utility, adoption, and inflation and productivity, because they're all functions of time. And that's my view on it. And as you can see, the real big question mark is what will each individual do? What will each family do? What will each institution do? What will each company do? What will every executive do? What will every nation state do? Everybody chooses how rapidly and how enthusiastically they adopt this asset class, and they adopt this network, and they adopt this protocol. Right? Bitcoin it's an asset, it's a network, it's protocol, and it's an ideology. And it is defended by computer power, electrical power, economic power, and political power. And right now, it's growing at a very rapid rate. The computer power is 420 hash rate. It would take all the computers in the world to attack it. Electrical power is 12.5 gigawatts. The economic power looks to be about $550 billion if I calculate the basis of Bitcoin investors. That's how much money's been invested. You can get to that back of the envelope estimate if you just take the 4-year simple moving average and multiply by the outstanding supply, and that's a pretty good surrogate for, on average, what people have invested to buy their Bitcoin. And then the political power is 220 million people that own some of it, right? And I mean, that's Google's best estimate right now. I think it's growing by millions every month. I expect we'll be 1 billion sometime this decade. And of course, 220 million people with $550 billion invested don't want their money taken away. And that's what drives their political behavior, and that's what drives the network.